Welcome to Dr. Fred Markets. This is not financial advice. While most people scroll past the noise, a few take the time to understand what's really going on. Finance, crypto, artificial intelligence, this is where it all connects. You made the right choice being here. Let's dive in.
Your 9 to 5 is dying faster than your favorite altcoin. Verdict: you're not investing in crypto, you're replacing your salary with volatility on steroids. Bitcoin today, $78,497, up 2.87%. That's not a price move, that's a raise your boss will never approve in a year, delivered in 24 hours by Math and Mania. ETH at $1,308, up 2.34%, is the junior analyst in this circus less flashy than Bitcoin, but quietly compounding if you're not an idiot trading every candle. While your HR department writes another work-from-office mandatory email, the crypto market just handed disciplined degenerates more upside than your annual performance review. But here's the punchline. The S&P 500 is at 723.56, up 0.68%, and people still call that safe wealth building. Safe from what? Excitement? Opportunity? A life that isn't chained to Outlook and lukewarm coffee? You're being told the story that slow and steady wins the race by people who retired on stock options, not index funds. USO, the oil ETF, is down 4.01%, while headlines scream about Iran war risk and oil hitting multi-year highs. That's the macro circus today. Oil geopolitics on fire, the commodity bleeding red, and yet Bitcoin grinds higher like it didn't get the memo about risk assets. War, inflation, rate nonsense, your life gets more expensive. Bitcoin just gets more narrative fuel. That's not decorrelated, that's aggressively indifferent. Now walk this into your actual life. Meta flat at $612, Google slightly red at $384, AMZN bouncing almost 2% at $270. That's your innovation economy. Big tech inching around like a tired heavyweight. Crypto is the lunatic in the parking lot sprinting wind sprints at 3 a.m. Question is, are you using that lunatic as a weapon or as a slot machine? Here's the real problem. Most of you treat Bitcoin like a lottery ticket while treating your miserable job like a sacred cow. You're emotionally conservative where you should be aggressive, and aggressively stupid where you should be methodical. You DCA into your employer's stock plan and then YOLO 20% of your net worth into garbage altcoins because a stranger on X wrote a thread. That's not a financial strategy, that's self-harm with extra steps. Crypto is not an investment. Crypto is a time machine. Used right, it pulls future income forward so you can buy back your life years earlier. Used wrong, it guarantees you'll be updating spreadsheets in a cubicle at 67 because you torched 3 bull markets on leverage and hopium. Here's the cliffhanger you don't want to hear. Your lifestyle in 10 years will not be decided by what you buy, it'll be decided by what you refuse to sell when everyone else panics. And most of you have never held anything through a real, soul-crushing 70% drawdown.
Does what you just heard make you want to learn more, to dig deeper, to ask better questions? That curiosity is exactly what separates people who understand finance from those who don't. Most people stop at the surface. You're going further. Let's continue.
So let's connect the dots. Bitcoin ripping while the world screams about war, oil drama, and fragile markets tells you one thing. Crypto has already become the shadow savings account for people who no longer trust governments, employers, or pensions. ETH grinding higher with less drama shows where the builder money parks itself, the infrastructure play for people who plan around decades, not weeks. The sleepy S&P gain just underlines the scam of the traditional script. Grind 40 years, pray your index fund outruns inflation, then hope your joints still work when you finally have time. Together, these signals say this. Your real asset isn't Bitcoin, ETH, or any ticker. It's time and flexibility. Crypto just happens to be the fastest, dirtiest, most unforgiving tool to compress decades of financial progress into a few violent market cycles. Not safe, not fair, but real. So here's the conclusion you won't get from your nice, polite advisor. If you're using crypto to get rich, you already lost. You use crypto to get free. That means you design a financial lifestyle where, 1, your monthly burn rate drops so low that volatility becomes a weapon, not a threat. Less lifestyle inflation, more dry powder when Bitcoin pukes 60%. 2, your crypto exposure has a job description. Bitcoin equals long-term freedom fund, ETH equals infrastructure bet, everything else, casino money, capped at a tiny percent. No blurry lines, no drunk decisions. 3. Your real goal is number of free days, not portfolio size. Can I pay 6 months of life with my liquid stack? That's a milestone. Can I walk away from any job offer tomorrow? That's the win condition. Brutal truth. If a 30% Bitcoin crash ruins your life, you weren't investing, you were gambling with rent money. If a 200% Bitcoin rally doesn't change your life, you were playing too small and lying to yourself about waiting for the perfect dip. Both are cowardice in different costumes. This is not financial advice, but here is the truth. Stop worshiping the asset, start designing the life. Bitcoin at 78 kel means nothing if you spend 60 hours a week building someone else's dream. Crypto's only real flex is this: the chance to buy back your time before your body breaks and your curiosity dies. So here's your assignment. Tonight, write down your monthly cost of survival. Then ask one question: what crypto stack, held through hell, gives me 5 years of FU money? Now you have a target. Now every DCA, every rebalance, every boring Tuesday in a bull market has a purpose. Exit the wage cage, not beat the S&P. Subscribe if you want the uncomfortable version of the truth, not the bedtime story. This is not financial advice, but it is your wake-up call. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.